It's Friday, April 9th, and this is the final day of the week for our zero DTE trading. And another profitable day. I think that makes about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. At least 10 in a row, 10 profitable days. And today was a good one. We took two trades. I took a long call earlier in the day, right near the market open, around 9:30, and then exited that so I could use that profit to finance an iron fly, which we took at about 11:20. So yeah. Now I exited the iron fly. The iron fly was centered around about 41.05, and if you're looking at the market right now, you'll see that it's at about 41.08. And the reason why I exited was just a few minutes ago that we in the SPX anyways we hit an all-time high, and so my thinking was that, well, if we start moving upwards, and we're centered right now, which would give us our max price, our max profit, that we're likely to continue to move up, and then that would degrade the amount of profit that we have. Now, I could be wrong. I could be dead wrong, and I could have left a lot of money on the table. But that's okay. I guess we'll examine that on the next time around. But still, it was, all in all, a good day. The amount of money that we risked versus the amount of money that we took in, again, was an asymmetric trade. In other words, we brought in more money than we risked. So that's good. And so far, we're averaging, from that regard, about a little over, I'd say somewhere between 150 and 200% of the risk that we put on. Now, that's what I would call an asymmetric trade. Now, I guess if you reverse that, you could also consider that an asymmetric trade in the bad sense. But even that, say a 1-to-2 risk to reward, or a 2-to-1 risk to reward, say a 2-to-1 risk to reward, for most people isn't that bad. To us, it's horrendous. I never want to make less or average less in terms of the reward versus the risk. And that's really what we're all about here. Now, the trick is doing that and keeping up your win rate, your probability of profiting, or for our purposes, our probability of touch is what dictates our probability of profiting. And so far, we're right now we're approaching about 90%. So now I want you to consider this: a 90% win rate and profiting on average almost double what you risk. Now, occasionally, about 1 out of every 7 or 8 trades, we truly get an asymmetric trade where we don't just beat our risk by 2 times. Sometimes we can beat it by as much as 8, 9, 10, 15, even 20 times. And that's happened a few times so far. I think that I think the average right now is about somewhere between 7 and 10%. Well, 7 and 11%, something like that. So the advantage of trading this way, at least our strategy, which is wholly different than what virtually everybody else is doing in the zero DTE world. And if you're not familiar with what zero DTE is, that's kind of like day trading options, but only on the SPX or the E-mini futures. And it's only trading them on the very last day of expiration. And for the S&P derivatives, that happens 3 times. It happens on Monday, Wednesday, and Friday. So we have 3 opportunities. And the reason why we do it is because when you're at the last day of expiration, you have a significant advantage in that if you're going to play or be a net seller of premium, that's the day where premium collection is at its maximum rate. And so we do that. Now, we don't always profit by taking net premium trades. As a matter of fact, quite often we profit with just a long call or a short put, or a long put. And so we take it a little bit further than that. And I suppose, there's no reason why we couldn't, do these same trades on Tuesdays and Thursdays as well. But there is a distinct advantage of doing anything that has to do with premium collection on Monday, Wednesday, and Friday, because it's the last day of expiration, and expiration is causing premium to decay at an alarming rate. Now, there are certain strategies that we can maximize this with, and one of them is the iron fly. I mean, generally we'll use a credit spread, sometimes a debit spread, sometimes a long call or a long put, and probably my favorite is the iron fly, which is a iron condor where the strike price, the short strike, is the exact same strike. So it's kind of like a butterfly and an iron condor kind of combined. So that's what we did today. Took a long call, wrote it up from the intermediate pullback. This morning we had really news that should have brought this market down hard. And that news was that inflation had increased in the month of March by more than 100% of what they were predicting. Instead of coming in at 0.5%, it came in at a full percent on the PPI, the Producer Price Index. And on any other day or any other market, we probably would have taken a big hit. And price did come down sharply, but then it immediately rebounded. And then as it rebounded, I'm thinking to myself, geez, where do I get in? And then it pulled back, and then it pulled back right at the market open, the cash market open, and that's when I decided to get in to an E-mini long call, and rode that up for the next couple of hours, next hour and a half or so, and made some good profit. Used that money to then finance, or at least reduce the risk on an iron fly, and put that on. And this was a let's see, it was 4,100 to it was about a 20 strike wide or 20 point wide iron fly. So it wasn't exceedingly wide, but it offered a lot of potential profit, low risk, and it looked like the market had come up and was starting to curl over or at least consolidate. So I felt that by putting the trade on there, I had a good chance of collecting max profit. We stayed in the trade for about 2 hours. Usually don't want to stay in an iron fly much longer than that. And it collected about $1, and then we get out. So all in all, good trade. I'll probably, slap myself silly for not staying in the trade, because the potential of the trade was to make around $6. And but when we made that all-time high, I felt that there's a good chance that price could run away, and then we would lose the dollar that we've already made. Plus, we already made money in the long call. So overall, I feel like it was a very good day, and we achieved our objective. One way we could have played that is, or one way somebody could have played that is if they had multiple contracts on, and let one or more of those contracts run while you lock in your profits with the other. So, but I'm trading with a very small account, so that doesn't really afford that kind of latitude. I know that many of our members are trading with much bigger accounts, so they can do that. But the account that I trade with is really used as a representative of the strategy, as opposed to sitting there trying to make the maximum that I can. I know that sounds weird, but I don't want to go on to YouTube and say, here's how you can make in 2 hours $7,232.25. That's bullshit. Because most of those guys that are telling you that, they might do that once in a while, and they'll only report on those, and then the rest of the time they're losing. So I'm coming on here every Monday, Wednesday, and Friday and telling you what our trades are and exactly what we're doing. All right. So if you're interested in joining this service, the link is down below. Sign up. We'd love to have you. But that's the report for today. I hope you have a great weekend, and we'll see you. Let's see. Oh, do we have a question? Don't the iron fly carry more risk than it brings in? No, not even close. Well, I can show you. Let me show you. So this is the iron fly that we had put on, and you can see it's closed now, but I put up one to analyze, and you can see that the risk here is about $270. Of course, that risk is only at expiration. With a flat P&L curve, there's and by controlling where you're willing to take profit, there's just no way you're ever going to come close to that kind of risk. But let's say it, even if that is at expiration, your risk, if you just let it go, your risk is $270, but your potential profit here is $730. So the answer is no. The risk isn't more than the potential profit. Now, in our case, the way I play iron flies usually is almost like a directional trade. So I put this trade on when price was right near the left wing, because the momentum was up, and it hit just about where I was targeting, and then started to overshoot. You can see price is right about here right now, and quite frankly, had I stayed in, we would have made a lot more money, but we made about $1. And I'm happy with that. I think that hitting all-time highs again, there's a very good chance that by the end of the market that we'll just rush to the right here. Could I have stayed in for another hour or so? Yeah, I could have, but then I would have been in the trade while doing this live stream, and that would have been distracting for me. Maybe not for you, but for me. So all in all, I feel good about what we did. So hopefully that answers your question. Definitely an asymmetric trade in our favor. Much more potential profit than risk. The other thing is with the iron fly, when you have that huge profit tent, the reason why you choose that is that if you get into the meat of that trade, the amount or the speed at which premium decays, or the amount that you can collect, is very, very high if you can stay near the middle there. And that's usually what I try to do. I try to provide my analysis so that price will end up in that third of the middle. I guess in, or maybe, half of the trade. Let's see. And go back to the big head here. Well, before I do that, so if I can stay anywhere between like here and here, we're going to, collect the max profit. Now, again, every time I look at this, it kind of irks me because price is now sitting here very close to the center, but it's already tapped an all-time high, and I'll show you that. So, that's the E-mini. Well, anyways, in the E-mini, we entered the long right about here. And then we exited right about here. And then that's when I put on the iron fly using 105 or 4105 as the short strike, which makes sense, because that's right about where it was. Now, if we, of course, that's for the E-mini. If we look at the pricing on the E-mini differs from the SPX by just a little bit. So anyways, we exited the trade right after it hit an all-time high on this candle here. And you can see it hit an all-time high, another all-time high here. And quite frankly, I expect it to probably run away near the end of the as we close in on the as we get closer to the close. I'm pretty sure this market is either going to go straight up or straight down. Like it seems to be the pattern these days. But it is what it is. I hate saying that, but it is. And we may have lost out on some extra profit, but I just didn't want to take the chance. Hey, I have a good win. I'll move on to the next day. All right, now back to the big head. There we go. So another great day on the 0 DTE. Like I said, you can't argue with our results. I would say somewhere maybe closer to the 200% mark, but averaging about 200% return on risk. And right now, as it stands, about a 90% win rate. So fantastic numbers. Totally chill trading. You never are sitting here in angst. No anxiety whatsoever. And that's really the primary difference between the way we trade, besides the fact that we're taking less risk and making more money than the other services. But while we're doing that, we're doing it with really zero anxiety. Our profit is always much larger than our risk. Even if we have a bad day and we lose, it's not the end of the world. It's just a tiny little loss. We're doubling or tripling or pentupling or 10 timesing that risk on most other days. And that's the exact opposite of the way. As a matter of fact, most of the other services, once they get into a trade, they're always fighting from behind, and they're waiting for the premium collection to catch up to them, if it ever does. And so they're sitting there in a perpetual loss most of the day. And because they take such small profit, it forces them to be in the trade for the entire day. I can make more money with less anxiety in less time with our strategy. And it's not only, the way we play the options. It also comes down to our analytical capability. And that's part of our secret sauce, I guess. And if you'd like to learn that, please join us. Let's see, we do have one more question. Looks like from the same fella. You're welcome. It's not a question, statement. All right. Now I'm done. And time to enjoy the rest of the weekend. Got to go out and walk the dogs. Maybe I'll take a walk in the woods out back here. Take care.